My name is Paul Westsells. I am the President and CEO of Western Copper and Gold, and it's my pleasure to be presenting to you at the Yukon Forum at the Vancouver Resource Investment Conference. Western Copper and Gold is a single asset development company. We're developing the Casino Copper Gold project. We've been developing Casino for about the past dozen years where it's been the key focus of the company. And easily the past 3-4 years have been the most exciting years in the company. And so I'm going to talk you through that and a little bit more about the project. But this is an exceptional asset, an exceptional copper gold project located up in the Yukon. I will be making forward-looking statements, so please review this before making any investment decision. So first of all, just to sort of get some of the key things out of the way here. First thing is that we trade on both the TSX and the NYSE American. So under the ticker symbol WRN. I point this out for a key reason, and that is if you're looking at our trading volumes and those sort of things, make sure you look at the NYSE American. We actually trade about 2-to-1 on the US exchange to the Canadian exchange, so it's very, very critical. Our cash position, we haven't done our year end yet, but at the end of Q2, we had about $30 million. The end of the year, we're sort of sitting with about $23 million in cash. I think we haven't finalized everything yet. Share price, when we printed this on January 20th, $250. I think we were $241 or $242 last time I looked at our share price just before I came into the meeting here. A few warrants, actually, those warrants are held by one of our directors and some employee options, but otherwise a fairly clean sheet. Who are our shareholders? Rio Tinto has a little under 8%. I'll be talking a bit more about Rio Tinto here shortly. After that, a pretty good group of blue chip investors: Fidelity, Franklin, Claret, which is a group out of Montreal, Copernic. Board and senior management also is well represented with a little under 5% of the outstanding shares. There is a royalty in the project held by Osisko Gold Royalties. They've been a good partner for us, actually, and over the years when we've needed, have actually provided us with equity financing as well. This is a very clear and easy investment at this point in time. This is one of the largest copper gold projects in Canada. As I'm about to show you, it's one of the largest copper gold projects in the world. It's located up in the Yukon, hence why we're in the Yukon Pavilion here. Yukon is, I've always said this is a jurisdiction with a lot of potential. It's now a jurisdiction that's really living up to its potential. Mines are getting built, mines are getting permitted, projects are moving forward. Lots of majors are moving into the area. In addition to Rio Tinto, you've seen Lundin, you've seen Teck, you've seen Newmont, all moving up into the Yukon. We got a new feasibility study that shows, and I'll be talking a bit more about that. And obviously the strategic investment from Rio Tinto, and the copper market. I talked about the previous 3 years as being critical, and this is really shown there. Started with a new resource in 2020, almost doubling the size of the resource. Got a PEA out in 2021. That's also when we brought in Rio Tinto as our strategic investor. Feasibility study last year, and then this year the big push is on permitting. So, kickoff, I talk a little bit about the arrangement that we have with Rio Tinto. So this is March of 2021. Rio Tinto invested $25.6 million to get a little under 8% of the outstanding shares. Why did they do that? They did that because they wanted to execute a scope of work to look into the project in more detail. With that investment came what's called an investor rights agreement. Bunch of rights with that agreement, but the key rights were the right to form a technical committee, which they sit on, a board observer, which can turn into a director if they increase their ownership to 12.5%, and the right to second people into the project. So the key thing, and the big headline shown there, they just extended the rights. Then this is part of the original agreement. They had a one-time, it's important to note, a one-time option to extend the rights by 1 year. They elected to take that option in November of last year, so now their rights are valid until November 28th, 2023. That's the only time that they have the right to do that extension. So what does that tell you? They extended their rights. It tells you two things. One, they're not done. They're not finished doing their evaluation of the project. Maybe not surprising. Big companies tend to move slow. And two, they still like it. Otherwise, why would they bother extending the rights? So, this is going to be the year where we see where things finalize with Rio. But it's going to be a pretty exciting year. And if you look at the work that we've done with them, as you can see, it reads like a due diligence list. We did a field program looking at drilling certain parts of the resource that they wanted to look at, a geotech program. We scanned a bunch of core. We did a fairly significant MET program. We press released that about 3 weeks ago. Looked at the tailings facility, reviewed the feasibility study, a lot of work on permitting and First Nations as well. But the key takeaway here is that the work that we'd agreed to do is complete, and it's now sitting in terms of an internal review within the company. Talk a little bit about copper. I'm assuming many of you here are pretty bullish on copper. I certainly am. And, there's a couple of good takeaways on here. And the one actually I like, one of my favorite ones is that on the bottom right there, China adds a London-sized bus fleet of electric buses into the country every 5 weeks. I mean, it's astounding. I mean, for those of you who aren't from Vancouver, you drive around Vancouver and every second car is a Tesla here. This is something that's happening, and it all needs copper, and you absolutely need more copper. And if you look at what's being predicted, it's predicted that we need 12 million more tons of copper. That's 150 mines the size of Casino. And as I'm about to show you, the Casino mine is pretty significant. We're called Western Copper and Gold for a good reason, significant on both the copper and the gold side. If you look at that, add up the copper with measured and indicated and the inferred, you're looking at 10.8 billion pounds of copper. On the gold side, that's 21 million ounces of gold. When we look at the revenue split, you can see 46% copper, 34% gold, 17% moly, or molybdenum. And I don't talk about this very often, because it's the third most important in terms of the revenue split. Molybdenum, when we did our feasibility study, was $14 a pound. Today it's $33. Will be a significant moly producer. It's another one of the critical minerals. This mine, when it is up and running, will be the largest critical mineral mine in Canada by revenue based on the copper and the molybdenum. So it gives you an idea of the scale. And while we're talking scale, let's take a look at that. And what I'm showing here, all the projects that are shown in the brown copper color are controlled by junior mining companies. All the ones in gray are being controlled by majors. We're the 8th largest copper project controlled by a junior mining company. So if you're a large company like, let's say, Rio Tinto, and you're looking to add to your copper portfolio, that's your shopping list. There's not much out there. Similarly, on the gold side of things, we're actually sitting as the 8th largest gold deposit controlled by junior miner as well. 21 million ounces of gold. It's a little difficult to find, difficult to assemble in one deposit. All right, we'll dive into the project here a little bit. Before I do, I always like to stop, and I've got a couple different slides that show the deposit, and point out that this is standing, where those people are standing there is probably where the first tons are going to be mined on this deposit. It's right in what's called the core of our deposit. But importantly, you can see it's semi-arid in this part of the Yukon. It's not that mountainous. It's a very easy place to build and operate a mine. So you look at the deposit itself. The surface of the deposit is depleted in copper, enriched in gold. That gets mined off first and goes on to a gold heap leach. That represents a little under 210 million tons at 0.3 gram per ton gold equivalent. Underneath that is where the real value is, and that's the mill ore, and the mill ore represents 1.22 billion tons at 0.4% copper equivalent. Not a bad grade if you compare it to a number of the other operations, but what's key to this project is the core zone. And the core zone sort of shown there, and you can look at the heat maps, the colors, you can see there's 1% copper equivalent in there's 0.8. You can actually put a resource around that. You end up with 400 million tons at 0.6. 50% higher grade. That's the first material you mine. So sure, this is a large, when you average it all together, the grade is only so-so, but it's the fact that you start with that high grade that makes this project work, and more importantly, separates it from a number of the other projects. And when we did our exploration program with Rio Tinto in 2021, what did they want to drill? They wanted to drill the core zone. And this shows you the sort of drill results you get out of the core zone. Close to 300 meters of 1% copper equivalent. And again, this was directed by them. We didn't keep drilling this. This wasn't to promote. I wanted them to keep drilling it down and, hopefully get 900 meters of it. But they were just looking at the lithology. Right next to that, 66 meters of over 2.5% copper equivalent. So just goes to show, the significance of this core zone and the very, very good grades that happen in that area. And when you look at and compare those grades, as I said, when you start mining and I've shown this over the first 4 years, it's quite a bit higher grade. So over the first 4 years, you can see we're actually 0.65 copper equivalent over the first 4 years, and then that drops to essentially 0.4 over the life of mine. You compare that, and I've chosen copper mines south of us in British Columbia, and you're looking at Copper Mountain, Gibraltar, Highland Valley. They're all mining 0.2 to 0.3. Mount Milligan, Red Chris, they're a little bit higher grade, but again, our first 4 years is quite a bit higher than any of those projects. And a good example here is Red Chris. Red Chris, great mine, it's sitting at around a little under 0.6, but that's only, 240 million tons. As I said, our core is 400 million tons at 0.6, and that's just the core. That's then surrounded by another 3.2 billion tons of additional lower grade ore. So feasibility study came out in June of last year, and economics look very good. 2.3 billion net present value, 18.1% IRR. Those are after-tax values. That's at $360 copper and $1,700 gold. So very conservative values. Payback is 3 years, and again, that's all that core zone. That's a 27-year mine life, and again, that's the 1.22 billion tons I showed you as the reserve. That is 1/3 of the deposit. So the 27 years is 1/3 of the deposit. This has got a mine life that's, easily 80, 90 years in terms of what we know now, and still open at depth and to the northwest. Looking at some of the other metrics from the feasibility study, and again, emphasizing that initial high grade, you can see cash flow close to $1 billion a year over the first 4 years. One of the things I really like to look at is the net smelter return versus, the operating cost. And the net smelter return, for those of you who don't understand it, that's how much money you make as a company after everything's been taken into consideration for a ton of ore. So you can see that starts off at $43 per ton and then averages out to around a little under $30 a ton. So that's all that money is coming back with an operating cost of around $11 per ton. So that's a pretty good operating margin, regardless of what you're making. I always like to say, look, mining companies, their job actually isn't to make copper, gold, molybdenum, it's to make money. And this is a project that makes money. But looking at that metal production, talk a little bit about equivalents. You can look at this in terms of gold equivalent, 1 million ounces of gold equivalent per year. So it gives you an idea of the size and scale of this project. Talking a bit more about operating costs, usually operating costs are described in terms of cash cost net of byproducts, so that's subtracting the byproducts. Again, just because we've got a significant byproduct credit on this project, you're looking at negative 80 cents per pound of copper when you're net of byproducts. Better way to look at it is on a co-product cash cost, $1.50 per pound of copper, $800 per ounce of gold. That compares pretty favorably to copper, which is over $4 right now, and gold, which is over $1,900. Capital cost of the project, about $3.6 billion. Big mines don't have small capital costs, but if you benchmark this capital cost with a number of comparable projects, you'll find this is what you'd expect to pay for a mine of this size. It's not particularly cheap, it's not particularly expensive, it's just the capital cost that you would associate with a project of this scale. A little bit about the economics again, from the feasibility study at $360 copper and $1,700 gold, project's got a $2.3 billion net present value. you look at where we're sitting now, $4 copper and well better than 1850, close to $2,000 gold. You're looking at adding another $1 billion onto the net present value. I actually ran the numbers, and I ran the higher moly price. I ran the better. We used this at an 80-cent dollar. The Canadian dollar is now at 75 cents. You run this at $4 copper, $1,900 gold, $32 molybdenum, and a 75-cent dollar. What you'll find is the project has a net present value of close to $5.5 billion. This is why people love these long life projects like this. You're going to hit a bunch of these cycles like we're going through right now. You're going to make a lot of money. This is why the likes of the Rio Tinto like these sort of projects. A little bit about ESG. We take this very, very seriously. We've been up in the Yukon for a number of years now. We've got very good community engagement, working very closely with the local First Nations. We actually won an environmental award for some of our reclamation work at the mine, and consider ourselves leading in terms of corporate governance. And we support a number of initiatives up in the Yukon as well. And I got to this slide once when I was on a one-on-one with an investor, and he said, everybody's got their ESG slide. What proof do you have? And I said, you know what? Thank you for asking me that question, because that's my next slide. And the next slide, this is an example of ESG at work. And this is around our tailings facility. This is a few years ago. Lots of concern around tailings and mine waste. No different here up in the Yukon. There's nothing particularly unique about our mine in terms of the tailings, but we wanted to address the community concerns. So we worked with the First Nations governments, the community, the regulator, the territorial government, went through a project called a BAT study, or Best Available Tailings Technology Study. Started off with 495 different options and whittled that down to the one that you see here. Lots of good engineering in this, but more importantly, this isn't my design. This is our design. It's the design that's been developed with the First Nation, with the regulators, and with the territorial government. Another example is our access road. And, this again is just sort of proof, that we worked very closely with the governments and the First Nations in the area. And all that good work really came to a head a few years ago when the Prime Minister looking younger there, the guy standing next to him is now the former Premier of the Yukon, Sandy Silver, made a major announcement, 3 access roads in the Yukon to mines. One of those is the access to our Casino mine. But what's interesting about this story is that before the Yukon government could make that announcement, they needed to sign agreements in principle with all of the impacted First Nations. That happened. That's what got the Premier or the Prime Minister to make the announcement. Then to begin construction, they needed to sign binding agreements with the First Nations. That happened. The first part of that access road, called the Carmax Bypass, is under development right now. We actually got a new picture. This is we just got this picture from the construction company doing the work up there. It'll be complete this year. I believe that's close to a $30 million contract to build that bypass. It's with a major bridge. So that work is actually underway. Also, a little bit about our neighborhood. This is an exciting part of the Yukon. The Yukon is exciting in and of itself, but this is a particularly exciting part. Obviously, we've got this great asset here in our partnership with Rio Tinto. Right next to us, we've got Newmont. They've developing the coffee project. They've sort of been sitting on that, but they were very active last year. I know they're our neighbors. We can see them when they're flying people in and out. So I think they're getting excited by that. We also have got White Gold, who presented here yesterday, and they've got a booth over here. And they've got both Agnico Eagle and Kinross as major investors. So lots of the majors involved, lots of excitement in the area. A little bit about valuation. We're still trading at about 15% or 0.15 times the value of our project based upon its net present value. And if you compare, certainly there's some lower and some higher, but when I look at our true peers, I see them trading at sort of 0.2 to 0.35, so we certainly have some ways to go. Another way to look at this is in terms of cents per pound of copper equivalent in the ground. We're trading for a little under a penny. So here copper right now sells for $4 a pound, and you can buy Western shares for a penny per pound of copper in the ground. So it's a pretty good deal. So that summarizes my talk. We really feel we've got a clear path here. We've all significant copper gold project in the Yukon, which is a great emerging district and a clear path to unlock value. In terms of what to look forward to in this year, a couple of things. Really, it'll be the conclusion of where things end up with Rio that I think is going to be of most interest to the shareholders. Big push on getting our EEA proposal forward as well, and a number of other sort of key things that we're working on in 2023. So thank you all very much.